Are you looking to learn more about investing in the central Indiana real estate market? You've come to the right place. Welcome to the Indy Real Estate Investing Podcast with T&H Realty, where we discuss all things related to investing in the central Indiana real estate market. Thank you for listening and enjoy the show.
Hello, everyone, and welcome to another episode of the Indy Real Estate Investing Podcast. I'm your host, Jeremy Tallman with T&H Realty. We are a residential property management company that services the central Indiana market. Today, we're going to spend some time reviewing the top 5 questions you should absolutely ask your property management company. And this is when interviewing them. When you're trying to make a decision about what property management company you want to go with, we're going to give you 5 questions that you absolutely should ask. And for this topic, I want to invite back our business development manager, Jake Knight. Welcome back, Jake.
Hey, good morning. What's up?
Yeah, thanks for joining me here. So just to recap, you are our business development manager here, our BDM, as we call you here at T&H Realty Services. You've been with us since
2017.
2017.
Yeah.
Had to think about it.
Feels like a lifetime ago.
Yeah. Yeah. So you've been here a while. You've been in this role for many years. And your job, I guess, to distill it down to a simple sentence or two, is you talk to potential clients about our services. Your job is to get contracts signed and put new properties into our management group. So I think you're definitely the most qualified to talk about this topic, because you do talk to potential clients every day. You hear the questions every day. You know the most common questions that are asked. But I think we all agree, and we talk a lot about this as a company with our operations group and just throughout our company, that there are some questions that a lot of people fail to ask that are really important. And we've devised some systems internally where we're asking these investors these questions or telling them things that they should know. And so, again, I just think it makes sense. You know, we're coming up, Jake, this will be the first podcast of 2024. This is going to go out in early January. And my guess is that some people have resolved in the new year, if they're a self-manager, say, I'm going to hire a property manager. This is the year I'm hiring a property manager, for whatever reason. They are tired of dealing with tenants. They're tired of all the time involved with managing it. Or maybe it's someone who's resolved this year to say, I'm going to actually buy my first rental property. I'm tired of talking about it. I'm tired of investigating it. I'm going to buy my first rental property, and I need to hire a property manager to do that. But it really doesn't matter what time of the year people are listening to this. These questions are applicable. They're not just applicable in January, they're applicable for the other 11 months. So I want to kind of divide this podcast into 2 different sections. Jake, I want you first to talk about the most common questions you receive. And then secondly, let's get into the questions that investors should be asking, kind of the meat of this podcast, so to speak, because really we consider this first call to be, this vetting process. We consider this to be very much of a 2-way street. The fit has to work for both parties. This is a relationship. And it can't just work for one party. There's going to be problems. So we're not one of those management companies that just says, okay, ask your 2 or 3 questions, sign here, and let's move forward. We've been doing this long enough. We know some of the hard realities being a landlord, and we work very hard to educate our clients, our potential clients, on that reality. So we don't necessarily have a sunshine and roses sales approach, because being a landlord is not always about sunshine and roses. There's some things that we have to let people know about. Some people know about it already, but if they don't, we need to make sure that they do know about. So let's get into it, the first part, and we're going to call this the 4 most common questions. So Jake, tell us, number 1, what's the most common question you get from investors during that initial call?
Yeah, well, that's not going to surprise anybody. What is the price of your service, right? What do you cost? People generally know to ask this question. There's really no 2 ways about it. When they're researching companies, they really have to include this in their metrics when they're looking to hire a trusted partner for their property management services.
Right. Because it does matter. I mean, your property management company, the price will impact whatever the company charges will impact their bottom line. So, it's like anything else in life. We all want to know what things cost. So no surprise, we have a pricing page on our website. It's one of the most visited pages we have. People want to know price. Hopefully, people that come to our website have already know our pricing because it's out there. But again, it's just a very, very common question. Price being the number one question you generally get. Number two, tell us the number two question you get from investors.
Right. Yeah. So what services do you offer? And this is a very general question, with a very specific answer. We do have this laid out on our website, and it is very straightforward, but there's also further reaching question of how do those services work? With that kind of goes into explaining why we're priced this way we are.
Yeah. So it's like, obviously most management companies lease properties. They do tenant turnovers. They do, management, things like that. So yeah, at the end of the day, if you kind of distill it down, we're all very similar in the services we offer. I would argue that we offer different varying results for investors and different levels of service. But at the end of the day, it's a basic amount of services or basic suite of services that most management companies offer. All right, number three.
Yeah, well, tell me about your company. People want to know who they're working with. They want to know if you're a national company, a local company, what size you are. And generally speaking, they just kind of want to know that you're human, I think. Yeah. So it's just kind of the overreaching, who am I hiring?
Right. Yeah, I think that's so true. I think, people can develop brands and you want to do business with X company because you've heard about them. But I do think there's definitely a subset, if not the overwhelming amount of people that, want to form that relationship with somebody within the company. And so, yeah, I think getting to know that company, who they are, what their makeup is about, how long they've been in business, all that stuff is really, really important. And you come up with a number 4. This one, we talked about this. This one surprises me a little bit that you get this question so often, but when you explained it, it made more sense. So what's the 4th most common question you get when you're having this sales call?
Yeah, I think that did surprise you. People just want to know what the property is going to rent for. So how do we determine rent? So what processes do we use to get that rent amount? I think part of that is they just want to make sure there's something clinical or scientific within that. We're not just pricing just to lease the property always. There's some scientific data there when it's done in a smart way. So it's kind of a twofold question. What can I rent my property for if I have a property? Or how do you determine the rent amount?
Yeah. It seems like, discussions with you and emails you get this question all the time, right? So it could be that you have a conversation with an investor and they say, hey, I'm looking at this property and they want a rent rate. Okay. So that's a very common question.
Well, yeah, and we get rental analysis forms just based on that question, right? So people just filling out forms to know what their property or what their potential property that they're looking at can be rented for. So yeah, it's not a small question. I could see why it might surprise some people, but at the end of the day, the numbers are the numbers, right?
Right. And that's your top line number. And when you explained it a little more, it made perfect sense and I know you get follow-up emails from people like, okay, hey, Jake, this one didn't work, but how about this one? What will this one rent for? What will this one rent for? So you spend a lot of your time doing rental analysis and as a byproduct, become like a rental expert. What homes rent for in given markets.
Yeah, it's important too, because these things change over time, areas change, so it's one of those things where it's important to kind of keep the metrics on, what market rate is in certain zones. Indianapolis is a very inconsistent city, so you have rents all over the map. So just relying on Zillow or Zestimate is not always a reliable tool. Contacting a local property manager or broker is really paramount, to getting the best answer. Just mainly because we're the boots on the ground. I'm in the streets. It sounds weird saying it that way, but yeah, I'm in these neighborhoods all the time, just driving by properties or going into them and seeing the change real time.
Yeah. I mean, Zestimates are fine, but they don't give the full picture. I think you're right. I think a good property management company, a larger property management company, can actually give you data within your neighborhood of what they've leased homes for. That's really important. I think that's really, really helpful as well. So again, I think talking to that boots on the ground person about what, Zestimate says this. What do you think about it? You may agree with it. You may think it's higher. You may think it's lower, but we have real world experience in renting these properties. And I think that a property management company can provide a ton of value in helping steer that, what I would consider the top line of your pro forma, to get on how profitable this property could potentially be. So
no question.
All right. So let's talk just a minute about, we have personas here, and really we've distilled it down at the very top level to two personas. We call them new landlords and experienced landlords. And we're getting calls from both. We have people that are new because they maybe are turning their personal residence rather, into a rental home. We get people that own in 10 markets and want to now come into Indianapolis, or we get people who have 4 or 5 properties that aren't happy with their property manager, want to transfer it over. So the questions you get, we listed 4. Do those vary? Are you getting different questions based on the persona for that new person versus that experienced investor? What do you see as their individual pain points, and what questions do you get from those?
Yeah. So you could break this down into 2 personas. New landlords, some of them have never worked with property management companies before, so they don't really know what to ask. Some of them have, but they're in different markets too, and so the experienced landlord has probably owned properties for years, and they've worked with property managers or self-managed. So they've kind of been through the trenches a little bit, and working with companies really kind of give you a good feel for if it's a good fit or not, right? The experienced landlord is going to ask questions kind of in relation to their experiences, right? So I had this experience with this landlord. I have to process an eviction. What does that cost in your market? What does that look like? What's your process? What's my involvement in that? Obviously, the big one is, how are you communicating? So I had a property management company that I couldn't get a hold of for 2 or 3 weeks, 2 months, or I didn't get a draw for 3 months. So what does your process look like with that? So they've kind of been through the frustrating points that they may have had with a bad property management company. So they're really kind of vetting the new property manager in that way, in relation to the mistakes the old property manager made. And the new landlord, it doesn't have those experiences, right? Mm-hmm. So they may ask certain questions that are similar. What does eviction look like in your market? That's kind of the elephant in the room. Everybody knows what those are. They know they happen. What happens when a tenant destroys my house type situation. Everybody's great fear. But at the end of the day, it's different when you've experienced something like that. So you're really kind of driving your questions in relation to that. And the new landlord really isn't. They're kind of in an exploratory phase as well. This is all new to me. Kind of guide me into that. And they're not always certain what exactly they want to ask or what they need to ask there.
Yeah, I think that's great. You don't know what you don't know. And that's why I think, and we've talked about this a lot as a company, new landlords need they need a longer sales cycle in a lot of ways. They need more conversation around what to get into. Now, you mentioned, you said some good things there. If someone's been in multiple markets, they kind of know, they've probably experienced multiple property managers. They know what a turnover looks like. They know what an eviction looks like. They know, just a lot of things. They get a lot of experience. So yeah, there's some good stuff there. So, okay, let's transition then to the top 5 questions that landlords should be asking. As I mentioned earlier, you don't know what you don't know. And so we don't want investors, to dump a list into our form that they grab from bigger pockets, and we've seen those before, Jake, come through our list. It's like, I've got 22 questions for you, and here they are. Because if we just answer those questions, say we answer let's say they send a form through and ask, the conversation has 3 or 4 questions they ask. It's so important to ask these 5 questions, because we don't want an experience to hit this investor down the road, or a process that we have that we implement at some point in the life cycle that comes out of left field for them, and have them thinking like, wow, I did not know that. That's not a good experience for anybody. So again, we don't want it to be like, hey, I didn't know you guys did this. And we could say, well, clause 7, or, on page 7 rather, of our property management agreement, it says that we can do this and that we do it. Again, that's not a great experience. So we spend time, you spend time really making sure after, questions are answered from the investor that we start asking questions or that we start providing information. So let's talk about those top 5 questions that every investor should be asking their property management company. Jake, number 1.
Yeah, size and structure of the organization in relation to the door count under management. What is the structure of your company with the portfolio you're managing, right? So do you have 4 people managing 1,000 doors? Do you have 50? So that's important, right? So who is my contact? That's a question I get asked a lot. Some companies are built as a team structure. That's certainly how we run. Some companies are what I call kind of Swiss Army, right? You have one person that does everything for 40 doors or 50 doors. So our approach has always been to basically find talent, put them in a position they're going to be good at, and have them concentrate in that position so they can be good communicators. So we're constantly monitoring our door count and growing our company in relation to that. That's been our model, and that's worked really well. So communication's been, paramount to that. It's the number one gripe I hear from people looking to switch is, how do you guys communicate? What are your systems in place to communicate well? When are you communicating with me? Stuff like that.
Right. Yeah. I think there's all kinds of different sizes and structures of organizations nationally, locally. So I think it's a really important thing for people to understand, like what kind of company, what size of company, what structure of company you're entering into business with. We have went to more specialized. I think more people have went into specialized roles in property management as they scale up, because somebody that is great at leasing, for example, may not be great at walking a property and coordinating a project to turn it. So we have taken that role of more we call it departmental, where we, get the people doing what they do best, because we think that ultimately services the client the best. All right. Number 2 on the top 5 questions every landlord should ask their property manager.
Yeah. One of my favorites. What's my involvement? From multiple facets. When am I contacted about maintenance? And am I involved in screening, the tenant? When am I getting my owner draws? What do the financials look like each month? And what kind of systems are you doing or are you using to report that? So we obviously, like many companies, have maintenance reserve on file. We have a threshold in which whatever the maintenance event that occurs exceeds that, we're going to involve our clients in that, because we want to involve them in the more important aspects, but not really the minutia, the small things. This is really kind of we're built for passive clients that kind of trust our services. So, hire us, we'll get it going and do right by you, and report all those things transparently to you and get your draws as quickly as possible. We're a little unique. We do weekly draws. I don't know many companies that do stuff like that. You could also speak on that, Jeremy, if you'd like. But yeah, basically the overall general question is, what is my day-to-day, week-to-week, month-to-month involvement?
Yeah. And this is critical, because I think there's a lot of different expectations out there depending on the investor. And this has to be understood right up front, that because some management companies will contact you on and get approval for every maintenance that occurs at the property. Okay. Some won't contact you if it exceeds $1, unless it exceeds $1 threshold. Some management companies, and I think this is a humongous mistake, will allow you to choose or deny rental applications. All right. Most companies don't, and most companies, or all companies, should not for fair housing. So it's really important to get in alignment, or find a management company that has the same alignment or expectations you have in terms of your involvement, because this can be a big rub for people. If you want to be involved in every single decision and have day-to-day, oversight of the property or the tenant, then you probably don't need a property manager. You can probably just build your own team and do it if you want to be that involved. But if you're like most investors, I think, that have a bigger mindset in terms of scaling and concentrating on what they do well, they let their property manager do things. Think of it like a financial advisor or a doctor and a surgeon. You're not over them every day, questioning if they bought a mutual fund or sold a mutual fund or whatever the case, or if they, perform surgery this way or that way, or, a car mechanic over them all the time, questioning exactly how they made your repair, there's got to be trust involved. And so this is really, really important. There are companies out there, I think, that will allow you to have decisions on every single aspect of your property. But most property management companies, as they scale, particularly have systems in place, and they're designed around providing you the best outcome because that's what all of us want. But it is important to understand what the involvement is. All right, Jake, the third most important question to ask your property manager.
Yeah. So what is it going to cost to get this thing ready, right? Get the property ready. So the cost of what we call make ready work, making the property ready for market. And this has been one of those subjects I've been speaking about it since I've been in the role, but it's really been accentuated since we've experienced the inflation that we have because, well, I think most people realize, inflation is real and it's happening really in every facet. They still get sticker shock when we go in. It's kind of one of those things where we're having a real discussion about what things cost nowadays. Painting a home isn't as cheap as it used to be, like many things, so just having that realistic expectation when you hand a property over to a property manager on what kind of investment is going to be needed to find a good tenant, you get it market ready. You just want to give them as good of an outlook, good of a heads up as possible with that.
Yeah, we added this to our kind of our sales script recently called, the inflation discussion. Because I think it'd be hard not to know that we've had a lot of inflation in the last few years. I mean, it's everywhere. You experience it in all facets of your life, whether it's the grocery store, the gas pump, whatever. And it's no different. I mean, I'd argue the trades have seen even more inflation than normal. It's expensive to hire people labor-wise. It's expensive to buy stuff. I've given a lot of examples. I give one specific example recently in a podcast about how a cost of a carriage house that I had quoted had basically tripled in 5 years. So I think it's really, really important. It's important to know the market that you're in too. What you may pay in California for labor is probably different than what you're going to pay in labor here. But it is an important thing. I think we run into a lot of people that said, well, hey, I had my house painted 5 years. It was X. Now you're giving me a quote for X plus whatever. So we do, Jake, you and I have talked about going over what specific things cost, what it costs to clean a house, what it costs to paint a house per square foot, what it costs to change locks on a house. So it is important that you get in alignment with that client about what things cost. Management companies will say, hey, we have the best labor rates in town. We can get the cheapest vendors, whatever. I think at the end of the day, if you're going to get quality vendors that turn the property quickly, which is really important to reducing your vacancy cost, you're going to have to pay something for that. Those really good contractors that are reliable, that are efficient, there is a cost to that, but there's also a massive benefit to the investor because they get that property on the market much more quickly and start earning income more quickly. So it's a big, this is a big topic of conversation now. We even have investors that, we painted their house 3 or 4 years ago, tenant moves out, here's a new paint quote. Wow, that's different. Yeah, it is. We all know it's different. We live it every day. Our investors don't. And so it's something we constantly have to reinforce. All right. The fourth most important question to ask your property management company.
Yeah. So are you prepared if disaster strikes? Everybody's great fear. So what if that roof goes out? What if you have a water leak, a pipe bust? Are you prepared for that? That's really a two-way street. I spoke to somebody recently that had an emergency maintenance item arise, with a different management company. And they actually followed up with that company and they actually tried their emergency line and they couldn't get through and they couldn't leave a message, which is a huge red flag. And their property that they actually had known the tenant. So the tenant had been communicating with them, which is pretty rare. But at the same point, that particular issue had not been resolved, and it's been 2 weeks. Obviously, huge red flag, right? So is the company prepared to address issues as they arise as quickly as they can? But is a client prepared to cover expenses in relation to that? And we all know those are probably more on the expensive side most times, right? If it's an emergency, there could be water extraction, there could be no heat. Those costs really kind of vary all over the map there. But you just want to make sure as a partnership that both parties are prepared for such things. Now, good property management companies, and we certainly, classify ourselves in this. We have preventative measures that we offer, clients that help mitigate items with servicing HVAC unit twice a year, or doing gutter cleaning, or this, that, and the other. But at the end of the day, a house is a house and things happen. So both parties really just need to be prepared to address issues as they arise.
Yeah, that's a great point, because it's not a matter, I think if you do this long enough, it's not a matter of if you'll have an emergency situation or a large cash outlay. It's just a matter of when you're going to have it. And this can come in the form mostly of maintenance. An HVAC system now, they're expensive. It's several $1,000s, to replace an HVAC system. It can also manifest itself in the form of an eviction, where all of a sudden you're not getting any rent. You're going to have to pay to get the tenant out of there. And then you're going to have, vacancy costs, make ready. So there's an acronym out there called a SWAN account. It stands for sleep well at night. And I think it's a good way to think about things, that that you have money on reserve to address most major issues. The rule of thumb has been historically to have 3 months of rent in a SWAN account. I think that needs to be 6 now. That's something I've talked about. I think it's the way things have risen and costs have risen. 6 months in reserve of rent seems to be the better number than 3. But I also like what you said about the management company and their response to emergencies. It has to be swift. If a management company doesn't respond to a basement, let's say you have a finished basement and that basement leaks and it's full of water, and that management company doesn't respond quickly, we know what can happen, right? There can be a lot of mold developed, which you're talking about a lot more money. So it is important that that investor understands the emergency protocols to make sure that when there is an emergency, that it's going to be handled quickly, and that the investor then, in exchange, does have the funds necessary to pay for that, to pay for that work. So, all right, Jake, the final number 5 question that investors absolutely should ask their property management company.
Yeah, well, this is kind of related to, cost to make ready work in some ways, but what is what is their expectation of condition for a property? So we require all properties meet, obviously, all health and safety guidelines locally. And that sounds like a pretty easy principle that every company should follow, but that's not true. Not every company has that requirement, it's because we take over properties all the time that don't have handrails or stairs are present, stuff like that. So we want to limit the liability of our clients as much as possible. And these things typically don't cost a lot of money to do. So at the very basic level, we want to get, all of those requirements met. It's what we call C+ or B quality of a property. So what we mean by that is, but it appears nice, it's clean, it meets all health and safety guidelines. And by all means, people can walk into it and it's a property that they would want to lease. They don't have a lot of objections to it or a lot of complaints. Obviously, every property has limitations, but we want to take the small things really kind of off of that list there. So it's a property that people can move into, that's safe, and it's habitable, obviously. So really, what is the property manager's expectations for the condition of the property on a year-to-year basis?
Yeah. So, health and safety is the basis of it. It has to meet that. That's going to be required by law. But most management companies should also have some things above that as well, like the things that they really feel like can make it, kind of conform to their occupancy standards. So we have a list of this. It's something we've worked on. We've had it for a long time, actually, but we've more recently put it out there on our website, because I do think it's important that the investor understands what the management company expects regarding that condition. We've all seen properties go on the market. We've seen examples of it that are dirty, that are beat up, smell bad, look bad, the whole thing. Those typically don't rent. They take a long time to rent if they do rent. And so we've developed some requirements of condition that we think will be the optimal result for our clients. It'll make the resident happy, want to renew, all that good stuff. So I want to put a link to that in our show notes. I think it's a great list for people to look at. There's going to be a lot of health and safety stuff on there, but we've added a few things that we feel like are really important to help, create that great experience for residents, which ultimately in turn should benefit that owner in terms of retention and tenants being happy, because tenants are customers and we want them to be happy. We want them to pay the rent on time and renew that lease. So Jake, thanks for joining me. It's been great.
Yeah, I had fun. No, thanks for having me.
Yeah, we hope everyone's picked up some information that will help them in their investing. We'll be back in 2 weeks with another podcast. In the meantime, we encourage you to share this podcast with your investing friends, leave us a review, and don't hesitate to reach out to us with any questions. Until next time, thank you so much for listening, and please stay invested in your investment.